This is Mitch with the Real Estate Investor Summit podcast. I'm here with Ben Fredricks. He's with NoteWorthy. And you know, I used to go to the NoteWorthy Convention all the time in Las Vegas, and back when Jack Sternberg owned it, but he sold it to Eric Halderman. And then Eric's asked Ben to come on and help him with it. So we got some new blood over there at NoteWorthy, and it's always good to see the changes. And quite frankly, me and Jack are getting older, and we got to bring in some young blood, you know, to spice it up and keep it all rip roaring. So how you doing today, Ben?
I'm doing awesome. Thanks so much for having me on, Mitch. I'm a huge fan of your podcast. I listen to it all the time when I'm out getting my miles in the morning.
Oh, thank you. So you're a runner, huh?
No, not anymore. I'm too old for that. So I'm mostly just out walking, huffing 3-4 miles in the morning.
I hear you. That impact takes a toll on you. So you used to be an RMLO, and you were helping people deal with Dodd-Frank or get new loans. Which one was it?
It was both, but the tail end of me being an MLO, it was sort of discovering this owner financing niche and just helping investors get compliant on their notes. So it was just something I kind of learned. I never even knew it existed until, an investor approached me about it. So
you kind of learned, you cut your teeth at NoteWorthy with the NoteWorthy network and the people there, right?
Big time. Yeah. So I used to go there as a vendor, right? So I was looking to meet investors so I could help them with my MLO business. And during the sessions, while all the other vendors would sit around checking their phones and Facebook and email or whatever, I'd actually go sit in on the sessions and just take a ridiculous amount of notes so that I could learn everything that I could. And what I learned is it's not that hard. So I really just kind of took the information and went home and ran with it and started buying properties for myself and creating owner financing. And it's just perpetuated over the last 3-4 years.
So you don't specialize in buying notes as much as you specialize in just creating them, kind of like what I do, right?
Yes, sir. That's absolutely right. So we're my other business, which is Odell Barnes REO. We buy properties in bulk from banks and auction, and then we'll either sell those, we'll either flip them to a local investor, or we will create an owner financing note on that property.
Okay. So what state are you doing this in? Where are you doing this at?
It's pretty much from Texas to the East Coast. So we don't get much out west, but it's a lot of Midwest Rust Belt for the most part.
Okay, those laws don't they vary a lot, the state property codes and all that. So you can't just cookie cutter it when you're going across states, can you?
Unfortunately not. That would be the easy way and the simple way, but yeah, it does definitely change from state to state. Like Texas, it's difficult to do land contract. Illinois has made it impossible to do land contract anymore. It's got to be a mortgage, deed of trust. So yeah,
they haven't made it impossible, but what they're telling you is they're just going to penalize you as if it was a sale and a mortgage and deed of trust or whatever. They're going to make you go through the regular foreclosure process, right?
That's right.
Yeah. So just like people say they outlawed, lease options in Texas. They didn't outlaw them. They said they outlawed contract for deeds. They didn't outlaw them. They just made the penalty that if you didn't report in a timely fashion, like by January the 31st, and accurately on a certain amount of data to your note payer, that the fine was $250 a day or whatever, up to the price of the value of the house. Basically, they didn't outlaw anything. They just made it so strict that why in the hell would you want to do it? But then you started coming to the conclusion of it's not that hard to comply.
Right.
Get what they want, do it within the time frame they want, and you're fine. And so everyone always runs away from it, and then they come back like a dog sniffing a rattlesnake, and then they finally say, I can take this snake. I can do this.
Yeah, quite frankly too. I mean, I had the same discussion with a lot of the investors I worked with and said, look, at the end of the day, I know you paying the cost of an MLO seems like, oh, this is just a bunch of hoops I got to jump through. At the end of the day, it's going to help, increase the value of your note because you've got a second pair of eyes. You're taking your emotion out of it and saying, oh, I want to get this deal sold. But you have somebody looking at it and saying, well, these people probably are not good qualifiers to get into this property. It's going to save you a headache down the road. It's going to increase the value of your note. I think it's a win-win. I think you can look at regulation one way, but if you look at the silver lining of it, it does help from a value standpoint, I think.
Yeah, well, right now, if you're not compliant, your note's really not worth anything, is it?
That's right. Yeah, I mean, you're going to take a huge discount, so it's just really not worth it, you know.
Yeah. So the other thing is when Dodd-Frank first came about, a lot of my competition got out of the business. They ran away, and I started to run away with them. And then I started backing up, and I caught myself, and I'm thinking, this business has made me one hell of a pile of money, and I shouldn't run away from it so easy. Like, what is this Dodd-Frank? What am I supposed to do? Of course, in the beginning, it was 2,500 pages, and no one really knew what it said. And, I found out who was controlling it. It was the Savings and Mortgage Loan Commission in Texas. And I found out who was the commissioner, the head chair. And I'd call him up and say, hey, what am I supposed to do? Because I'm unclear and I want to be compliant. First, just walked out with my hands up, said, I surrender. What do you want to do? Yeah. How do I do this? And became good friends with them. And actually, we kind of discovered how to do it ourselves, along with Eddie Speed and the Seller Finance Coalition and people that were up there trying to lobby for common sense regulation, for the real estate investors. So, by the way, real quick, I'll give a plug. Go to texas100.org. If you're in this business in any way, shape, or form, in the creative real estate business or the note business, you better watch out what's going up in Washington, because if we're not at the table designing what they're going to say or how these laws are passed or having input, then we're on the menu. Believe me, they're going to eat us alive. You should see some of the crazy stuff that's up there now. I'm not going to get into it, but texas100.org. Please become a member. Help us out. So you're buying, you have some real guts. You buy property all over the flyover states mostly?
Yeah, pretty much. Yeah, it does take a little bit of brass tacks to be able to do it. I mean, the first go round was super scary. Like, you're like, okay, I'm not getting eyes on this property per se. And when you're buying in bulk, it's a little bit easier because all right, even if I screw up on 10% of these, I'm going to be okay. But if you're buying onesie or twosie and you can't see it, you don't go out to the property, you don't have those resources, it's gonna bite you.
When you're buying in bulk, so I guess you're buying REO lists from banks or something where.
That's right.
Yeah. So you're paying 10, 15, 20 cents, 30 cents on the dollar. Your margins are huge. So like, you're going to have a couple of losers. It doesn't matter.
Exactly.
You just take the $5 million you would have made, and now you only made 4.5.
Yeah, exactly.
So that's why you're having to deal with all the multiple states, because those lists never come with like just one.
That's right. Yeah.
A list with all the houses in one state. They come spread out all over the place.
Yeah.
And I imagine you make some friends with some people in states and you just can share in the purchase of that group.
Yeah. I mean, you have to, right? I mean, this business is all about relationships. So at the end of the day, if you have people, that are there to help you through the process, we work with a lot of wholesalers that help us out on deals, people that will be there to put up signs or whatever the case may be. So the entirety of this business, and I'm sure I'm not telling you anything you don't already know, is that relationships are totally key in the way that you're building a business, especially in real estate.
Yeah, and you can't glean the field, If you got a wholesaler that's helping you out, give him a couple, you got 5 houses in that state or whatever, you just give him one at a super great deal so he can make some money too. I mean, can't glean the field, keep it all. Then you won't have any help, or you won't have any sincere help.
We think that, Mitch, we take that same approach too with our investors. I mean, the guys that buy deals from us on a consistent basis for themselves to fix up and flip or whatever they're going to do. Look, we're all about hitting singles and doubles. Like, I don't need to swing for the fences every time, on a deal, because you're exactly right. I mean, how many times are they going to come back to that well if they're not winning on the deal as well. So I think, together we can all win, and that's just a mantra we've tried to live by, in our organization.
No matter what, I mean, how easy that sounds though, you got to work to find the right people. And when you have the right people, it makes all the difference in the world. Don't get discouraged, right? Like if you go through a couple of people to get to the right guy in that city, to find the right guy on the first time usually doesn't happen. But I mean, there's probably ways to up your odds, but sometimes it's just trial and error till you find the right guy. I've had to go through sometimes 3 or 4 or 5 people. It's like, my God, is anybody in this town honest or give a shit, and then finally you find the guy. And so this event or this network, this group of people at Noteworthy, really, there's some pretty sharp people in those crowds, aren't they? I always say when I go to these seminars, I'm paying to see the speaker, but I'm getting sometimes just as much or sometimes more. After you become an expert in a field, it gets harder to find a nugget from a speaker.
Yeah.
Speakers are usually trying to sell something, right? So they're telling you all the upside and everything. Usually what I'm learning from the audience or at lunch and dinner is like the downside. How do I mitigate the downside? What really happens when this crap happens? Tell me how big this boulder is that's teetering on top of the cliff above my head. And what do I do to get out from under it? You know what I mean? That's where you learn that stuff, is usually from the people that are out doing it, real people. I speak on stage too, but I try very hard to give the upside and the downside. A lot of people that are talking to you, they're just giving you the upside, and so.
That's 100% true. I mean, every conference I've ever gone to, the most I've taken away is from the people that I get to talk to in between, like just having coffee, meeting for breakfast before the event starts. I mean, first and foremost, I've made amazing relationships that way. I've raised a bunch of private money doing that. So, it wasn't going to a conference if it cost me, a couple $1,000 to go, to fly out there, to be away from my family, to do the hotel room and everything else. A lot of the people, they'll go listen to the speakers, they'll take a whole bunch of notes and never go back and do anything with it. But if your main goal is to go out there and say, who can I meet that is going to help my business? Who can I help with the knowledge that I have? Man, it's a huge impact, because like I said, I took a bunch of notes from a lot of the speakers, but the people I met at events like meeting you at Note Expo, I've met Eddie, talking to him off stage, at Noteworthy, Note Expo, and, other note investors that aren't on stage, that are they're in the thick of the game doing it every single day. Like, you can go and talk to whoever the person is and say, all right, who's the player in this room? Like, I know they're probably not on stage. Those people, you're exactly right. They're working for a company. They've got, hey, come service your notes with us here. Come do this. But who are the players in this room? Who do I need to meet? And that's a key question in any event you go to that will really serve you well.
Yeah, and that's why live events will never die. They say they're going to die because you don't need them, because you can do tele events and people don't have to leave their house. But that's not where the magic happens at the event. The magic happens in the hall.
I'm so glad you said that, man, because I literally just was debating this on Facebook the other day. I just asked the question because we're doing a live event and then there's other virtual events going on. I've done virtual events. The problem is that I get so easily distracted when I'm at home. First of all, I've got a 5-year-old daughter. So if I'm sitting there trying to watch something on my iPad, daddy, what are you doing? And it's just not going to happen, right? Like, I'm just not going to have the time to get to it. Granted, I'll get a recording and maybe I won't get distracted by the 5,000 other things I got going on to go back and watch that video later. But if I'm in it and I'm just right there physically in person, it's so much better. But you're absolutely right. The networking piece of it is so important. And if I'm doing it virtually, I can't meet anybody. Who am I going to talk to?
I have lifelong friends, like you said. I have lifelong. Since the time I went to that seminar, they've been my friends. Some of those people have been 10 and 15 years, So,
yeah.
And we may not see each other very regularly, but we talk all the time via Facebook or email or whatever, or phone. We're, they're friends. And So I want to encourage people. You gotta note next noteworthy convention. Is it in Vegas again?
This one is actually in Anaheim, so it's like literally right across the street from Disneyland. So people could bring their family, or they can head out to Disneyland afterwards. You know, go see the fun, eat at good restaurants.
I have never understood why anybody had a convention in Vegas. I have never understood that. I mean, it's like, geez, maybe you should have it in the middle of the Arizona desert somewhere where there's just a pool and a restaurant and a bed, you know, so we could like really concentrate and get this done, you know?
Yeah.
So
hey man, there's lots of good networking to be had playing some blackjack, let me tell you.
Yeah, well, not the way I played it. When is this event in Anaheim?
February 27th through the 29th, so it's coming up in a couple of weeks. We're exactly almost 30 days out.
Okay, it's the Noteworthy Convention. I want you to go to reinvestorsummit.com/notebiz, and all the details will be there. You can sign up, get the itineraries, who's speaking, what's going on. Who is speaking out there? Do you know? Or
Yeah, we have a whole bunch of people, but we're going to have people speaking on owner financing. We're going to talk, notes and partials, which I just, Eddie Speed taught me. Eddie and his wife Martha taught me about partials. That shit blew my mind. Like I was like, what? I can sell a piece of this thing? That's amazing. And
hey, so I've known Eddie since like 1998 or 9, or certainly right around 2000, and we've talked for hours and hours and hours and hours. And then one day, 18 years later, like I'm finally ready to own the concept of a partial,
Yeah.
Like you can read about it or they can tell you about it, but sometimes until you're ready, which probably has to do with maturity and how you understand the subject, you don't get it. And it can be, you can read the same exact 2 pages in a chapter 18 years later, and it means a completely different thing to you because you're ready to accept what they just told, what just got told to you. And so I that what happened with me with Eddie. I started running back to Eddie and I said, Eddie, do you know that if I would have kept the last 2 or 3 years of every note I'd ever sold, I'd only given up like $1,000 a note, but I'd be worth millions of dollars today. And he says, yeah, I've been telling you that for 18 years. You haven't been hearing me. I said, no, I was hearing you. I just wasn't capable of understanding. You know what I mean?
What's Eddie say? That dog won't hunt.
That dog won't hunt. I kept sending that dog over there, but you wouldn't hunt it.
Yeah.
So
and then in addition to that, just talking about private money. So it's going to go beyond notes a little bit. So we'll have some guys there talking about multifamily syndication. So, we're going to tailor towards, you said getting some young blood in there. I think a lot of the events that I've gone to in terms of notes, they tend to be people of my age group or older. So, 40 plus. And I think a lot of young people, they just don't know about it. Like I was, I didn't have a clue about notes. So,
selling your houses with seller financing certainly has been like one of the best kept secrets on the planet. As much as you or me might go out there and try to even talk about it, it's like no one grasps that. And you'd think it was a nasty thing to do or something, because if you go talk to bankers about wanting to borrow money so you can wrap their note, they glass over, it's like, certainly you understand this concept. I mean, it's not rocket science, but no one really gets it until they do get it. And then like I said, once the concept, they're like, holy cow, I can have cash flow. I don't have to have liability for everything that breaks. I understand it's going to be temporary, but my markup, I received my appreciation the day I bought,
Yeah.
And I can be in control of how much of it I want when you're creating it, I suppose, creating your notes, if you could buy notes at super discounts all the time, quality notes, you could just shortcut the whole process of buying a house and selling it with owner finance. You could just go get a note, but you never really know that note like the one that you made.
That's right.
You know what I'm saying?
Yeah, absolutely.
I know exactly about the guy who's in my house, that house over there, because I put him in there. I know that his work record was verified and that his criminal history was verified and that everything was done. I know, pretty well know that guy in that house, you know, where when you buy a note, I don't know, I guess there's ways to mitigate your circumstances, but most people I know that buy notes don't really know about that note except for how long it's been seasoned and how long it's been paid, if that hasn't been fabricated somehow.
Right. Yeah, they know the data, and a lot of times the data is not all of the information. It's just not. I mean, you haven't had a conversation with that buyer. You don't know, you know, their background. Like you said, you don't know how long they've, you know, maybe they've progressed in their job, or they had a hiccup before, right? Like they had a prior bankruptcy, but now they've gotten their life back on track. Well, if you just look at that file and you see bankruptcy, you're like, well, this is out. You know, haven't had that conversation with that borrower to know, all right, yes, they screwed it up, but they've got their shit back together and they're really rolling now.
Yeah, the truth about that is every one of us can be up for a bankruptcy tomorrow if the good Lord says we need to learn a lesson or whatever. It can happen to anybody, and it can happen, and it doesn't have to be your fault. You know, you don't have to cause it. It can just be caused by a whole bunch of a range of things. So, you know, we're looking at people to go in and talking to a lady who had a 430 credit score. You know, she was perfect for a long time. Then she got like the 430, and then it went for a couple of years, and then it went back up to good, really good. I'm like, what happened here? You know, well, my husband was a truck driver, and I have 4 kids, and I was a stay-at-home mom, and he got killed in a trucking accident. I said, well, okay, so that's where it went bad. What happened to make it better again? You know, I met a man who made 3 times more money than he did. We got married last week, you know, last week. So
the Lord works in mysterious ways.
So what do you, how long, you said it's from the 27th to the 29th? Is that what you said?
That's right. Yeah, we're in a leap year this year. So.
Oh yeah. Yeah. So that's going to be a lot of information in 3 days.
Yeah, it's basically 2.5 days. So, but we're going to have a lot of panels as well, so people can really, you know, ask quality questions.
Oh, panels where people ask questions. I like those. I like that form. I like them a lot better though when I'm on the panel and people are actually asking questions. Sometimes they don't ask questions, but
yeah, one of the things we've done is you know, is start to survey the audience ahead of time to find out what they really want to know about. So, you know, hopefully we'll have a jam bunch of questions asked. I know we've got a ton for private money. That always seems to be the biggest question for people is, oh, I got the deals, but I can't find any money. Or, you know, I can't find the deals. I've got money, but I can't find the deals. It's usually those two things.
So
right?
I know how to do private money on buying my house and everything. I've got the houses. Is it the same for raising money to buy notes? Is it exactly the same or a little bit different?
Totally. I mean, really, you're just looking at margin, right? So when you go and buy a property and you're using private money to do it, you know, all right, I've got to pay back my private money person 8%. But if I'm getting a 30% ROI on this property because of the note, there's my spread. It's the same.
Yeah, but I was saying, as for the lender, he's still in the same position too, because he still has a first lien on a piece of real estate. And so the question is, what is that real estate worth today?
That's
not
right.
Not that value means anything to me as the note holder or the note buyer, except for if I have to take it back, what kind of boat am I sitting in? So, and of course, the higher the value of the property compared to the balance of the note, the more secure everybody feels. It's all the same paperwork, really. So I'm saying the note purchasing business and the note creating business are basically exactly the same, except for one little piece in the middle. You know what I mean? Where I have to go out, buy a house, and find someone and create a note. When you buy a note, you're just finding all that's already happened. But
you're just finding the source for the paper. That's it. So
then that leads me to the next flash through my brain here, is that private money is critically important to the note buying, as important as it is in my business to the house buying and then selling with seller finance. You know, I have a course on raising private money. I have $22 million of private money and counting, because when you're holding these notes long term, it's not like $1 million. You can go in and out $250 at a time, $250,000 at a time. When you're holding notes, these notes are got 15, 20, 30 years left on them. When you get your private money out, it stays out there a long time. So you potentially need a lot more money than a flipper does, because the flipper's putting the money out and getting it back and putting it out and getting it back. And so how do you have a lot of private money?
Yeah, so that's one of the lessons we learned, at the very beginning. So we started out with just one private lender who gave us about 160 grand. And then about 50% of that went to notes, like to buy or to hold, so they became owner finance properties. And you're exactly what you just said. You're like, I'm only getting so much money back. I can buy less deals with that now. So you have to find a way to either raise more money or liquidate those notes or a partial of them so you can recapitalize. But raising private money is the much better deal, because you're just getting more money to buy more inventory and to create more wealth in notes.
Yeah, make no mistake, the money in the seller finance strategy and in the note buying strategy is in being the bank, not liquidating the note. The money's not in liquidating the note. Although when you're young in the business, or when you have some special financial needs pop up, you might have to liquidate some to get done whatever you got to get done, but the art of the business is, and I think you'll agree, is never sell a note. Just keep adding notes on top of the notes that you own. And, I like the way I do the business and buying notes, because I can do a lot of little deals and not have everything in one basket. I can do a ton of little deals, but you look back over your shoulder and there's a mountain of notes and the cash flow is tremendous, but it all hinges on the private money.
Indeed. Yeah. One of the worst calls I get is, hey, I want to pay off my note. Like, that's like, oh shit.
I'm trying to get the 500 notes owed to me too. You know what I mean? Trying to get the 500 notes, Mike and my partner and I. You can't hardly do it, because once you get around 275, 300 notes, you'll go out and create 10 owner finance notes in a month and a half, and then you get 8 phone calls saying we need a payoff, from 10 other people in your coffers.
Yeah.
And so you did all that work for a month and a half, and now you're at 302.
Yeah. That's one of the challenges, but I mean, hey, I'll take it. That's a good problem.
Well, yeah, what a shame. 10 people lump sum some money on me, like 10 or 15 or 20 or 30,000 a piece. It's a really horrible problem, Ben.
Yeah, exactly. I'm only crying over the work, not the money. Let's make that clear.
Yeah. So just so anybody wants to know, my course is called Private Money Changes Everything. You could find it at 1000houses.com under coaching and mentoring. It is not a very thick or heavy course. You buy it, it's really light. It's like creme those desserts, creme, what do you call it?
Creme brulee.
What? Creme brulee. Yeah. Or cheesecake. It's just rich. You don't need a lot of it because it's rich, and it's only like 7 steps. I show you exactly what I do. And then there's 21 objections that I have the answers for you. You just memorize the answers to the objections. And if you hear a 20-second objection that I don't have on there, for heaven's sakes, call me and tell me. But I've been doing this for a long time, and I've never heard more than these 21 objections. And then I have the way that I present it. And then the way I'm presenting is, I'm not asking anyone to borrow money. I'm just telling them how my business works.
Yeah.
I find an excuse to tell them, you're an attorney. Hey, let me tell you about my business and tell me if you can poke any holes. Am I doing this right? And then I start explaining my business. We get to the part where I'm borrowing money and how much I'm paying and how they're protected. And pretty soon they raise their hand and go, hey, can I be one of those guys?
Yeah, absolutely. Yeah. And tell you the truth, Mitch. I mean, I read your book probably about 3 years ago. And this is the time I was being an MLO, and I think I had seen you in an event, and I was like, oh, let me pick up that book. So I breezed through it, and first of all, it's a funny book. There's lots of great stories in there that I really enjoyed. But my takeaway from it at the end was, all right, this guy's like me. He didn't, he basically forewent the formal education and just said, hey, I'm going to go to work. I'm going to see what I can make myself in this world. And I just had the epiphany. It's like, okay, if Mitch can do it, so can I. There's no reason he can buy 1,000 houses. I can't. I mean, he's figured it out. All I have to do is figure out the process and then put it into play. That's it. It's not a mystery. Like, nobody's better than anyone else. I mean, so many of these people at the Note Conference, they're so unassuming, you wouldn't know that they're successful until you talk to them. But when you realize what they've been able to do, you just have to become a sponge and start.
No, that's another plus to go into the event as opposed to doing a webinar or something, is because you're exactly right. You find out that the people that are really successful in this business, they're not just phenomenal phenoms or anything. They're regular people that dedicated themselves to a subject, that became an expert in it and worked it and became worth sometimes millions and millions and millions and millions and millions of dollars. I mean, it's not hard to fathom how you can become a multi-million dollar. When you buy a house for 50 and owner finance it for 100, and you get 10,000 down today, but they still owe you 360 months of $500 a month positive cash flow. That's $180,000 they still owe out in the future before the first payment's ever made, after the down payment's been collected and before the first payment's ever made. So if every time you do a house, you collect some money up front and they owe you a little, like $200,000 plus or minus on average, it doesn't take long to become a multi-million dollar. Heaven forbid you turn on the afterburners and like really serious.
Yeah, I mean, overnight, I mean, your net worth is just going like this on paper. It's unbelievable.
Yeah, so my business partner, Mike Powell, I met him when he was 25, and I don't normally take students right in my hometown for a whole host of reasons, but I found out this guy put himself through college all by himself, everything. Like Dad said, you're 18 and 1 minute old, you're on your own in 30 days, you're going to do it all, and you're going to pay for it yourself. So I decided to make an exception for him. And, he's 33 years old now and a multi-millionaire, and just getting started.
Yeah.
But in as short as a year and a half of being a student and, 5.5 years of putting his nose to the grindstone, his future's going to put mine to shame. You know what I mean? I had my head so far up my butt when I was 25. I don't even know. I couldn't even tell you.
Forget about it.
Were you a young starter or a late starter?
Oh, I was a late starter for sure. Like it didn't really click for me until my daughter was born. That was like when it was like, okay, this is real.
What age?
It's time to get to work. That was 37. I was 37.
See, I was 36.
Yeah.
I did everything from, I'm 58 now, or be 59 in a few weeks. So from 36 to 59, I have, and I say this in a humble way, I exceeded my expectations over and over and over. What I expected for myself in this life, I had no idea. But all I tried to do is, I wasn't trying to compete with Ben, or I wasn't trying to compete with Eddie Speed, or I'm not trying to compete with anybody. I'm just trying to do better than I did last year and easier. When I was young, I got to do more than I did last year. It doesn't become about more after a little while. It's like, I need to make more money easier than I did last year.
Yeah.
And hopefully the plan is to cut the volume, because you can't just keep increasing the volume, your back will break, right?
That's right. Yeah. I think, you said something interesting there, and it makes me think of one of my mentors told me, he's like, I'm not chasing anybody else. The only thing I'm chasing is my potential. And I didn't learn that until a later age. So that's why I said I wanted to bring some more youth to this industry, because they just don't know. And if we can show them and raise it up and bring more awareness, it just creates more opportunities for everybody.
Could you imagine what would happen if they taught this stuff in school?
Oh my God. I think about that almost every day. Like, what if I had learned this, in high school? And I know I'll set my daughter up. I'm already talking to her about it. At 5 years old, she's getting the seed planted of buy real estate. And these are what it can do for you. So.
Yeah. Like if you put $2,000 a month, a year in an IRA from the time you're 18, by the time you're 40 or something, you can retire. I don't remember the math, but to be able to make $15,000, $20,000, $30,000 at a whack starting at age 20 or 21 or 22 or 23. My God.
Yeah.
You know,
I just didn't have anybody in my circle that was doing that stuff, you know?
that's what these things are for. Noteworthy or wherever, that's what they're for, is to go figure out those people in that audience and on that stage that can explain to you in whatever language you need it explained so that you can understand. Like sometimes they had to talk real slow to me because the subject was so far over my head. I was like, please, you know, you're like talking Chinese right now. Can you slow down? You know, and other times, you know, I was right with them. I find that if you're not getting it, don't leave the room. Just keep hanging around the guys and keep listening to the talk until there's a breakthrough in your brain.
Yeah. If you're not getting it, you're not understanding it, it means you're in the right room because you're about to level up. You're about to level up what you are.
There was this guy named Peter Fortunato. You ever heard him talk?
Sure, yeah.
I would be in rooms with this guy and he would be blowing my mind and I'm right with him as he's explaining it. But the minute he left the room, I could not explain it to anyone to save my butt. I was like, well, you know, so I had to watch that guy over and over and over again before I could repeat back what he said. I understood it when he was showing it to me, but I couldn't play it back. You know, I couldn't go out and do it myself because I couldn't play it back.
Yeah.
And I just had to stay. It was about, so then I listened to that guy and I went on about my life. And then it was like 4 years later, I said, Peter Fortunato's down the street talking. I'm going to go listen to this guy. I wonder if I'll understand him now.
Yeah.
I went to see if I would freaking understand him now. Like, have I grown any? Like, am I going to be able to keep up with him now? And I went and I could keep up with him. That's when I know, like, wow, I went from some place to another place in the last 4 years.
It clicked. I mean, sometimes that's all it takes, right? It takes just constant dedication and time to learning and understanding. That's why college takes 4 years, right? These people, when they get in, they don't know how to be, you know, whatever, an engineer when they get to college. I mean, it takes them time to learn what that is going to entail and get through that process. So it's no difference in your own personal education on any given topic.
It's my personal opinion that most of that stuff can be learned in a year and a half, but you know,
you might be right.
If they just cut out the bullshit that they're trying to ram down your throat, you know, with all the other courses that are mandatory, like who needs that?
Yeah, you might be right. I'm still not using that algebra from college, so, you know.
Yeah, right. I learned math a whole lot better when I needed it to improve my bottom line financially. I started learning division and subtraction and multiplication. I learned how to arrive at the ROI and all that stuff.
Yes.
I wasn't interested in high school because it didn't mean anything to me.
Exactly.
All right, go to REInvestorSummit.com/notebiz, B-I-Z, and get the details on the Noteworthy. It's February the 27th through the 29th. It's in Anaheim, California, right across the street from Disneyland. So get in some learning, maybe book a couple extra days, take the kids on the teacup ride or something. You know what I mean? You know, is it BYOB yet? They don't, Disneyland?
At Disneyland? No. In fact, the only place you can drink in Disneyland is at Club 33, which is that super exclusive, you know, little club that they have inside of there. So I went to it one time. It's really awesome if you can get in. So
yeah. Well, in my old days, I would have a way to get the booze in there. I don't care who they are.
I'm sure you can do it. I'm sure you can do it.
I took it as a personal challenge, you know.
Yeah.
The day I can't sneak booze into Disneyland is the day that I need to just quit.
You see the dads walking around there too, and you know they could use some booze.
All right, man. This is a huge topic. Check out Private Money Changes Everything. I don't know. Do you have a course you recommend on private money, or have you talked to anybody, Alan Cowgill, or anybody that helped you with raising private money?
Yeah, your course helped me. I also, Dan Zatowski is another fellow investor. He helped me with private money, just understanding it, and the nuances. But yeah, I mean, get Mitch's course. It's great. I mean,
well, look, I hope I'm being transparent. I love to sell you a course and I think I can help you, but I'm not the only guy. What's really important to me is that you go get somebody and you learn how to do it. I don't, you know, I'd love to be the guy, but I'm not on this podcast for that. really sincerely on this podcast to try to help people get wherever they're going, however they got to do it. And I know for sure, one thing for sure, I'm not for everybody. So I am for some people, I'm not for everybody. That's just the way it is for everybody, I think. I think the whole world's like that. So if I'm your guy, I'm your guy. If not, find somebody. But believe me, raising private money will change your life. It really probably doesn't even matter what business you're in. You think, Ben? Private money can help probably any business, right?
That's right. There's always investors looking to invest in something. So they'll follow a deal.
And you know what's so important about raising private money is when you go to banks, they tell you what the terms are. These are your choices and the kind of loans we'll give. This is how long we'll go. This is the rates we're going to charge. When you're out there looking for private money, you're naming what you need and you're trying to find the person that suits. And so you're going to get exactly what you need for your business. That's the most major component of private money is you're setting the terms of how it's going to go.
Amen, brother.
Yeah. So, all right. REInvestorSummit.com/notebiz. If you're interested in private money changes everything course, go to 1000houses.com, look under coaching and mentoring or courses. You'll find it. It's not that hard. And what should we add before we go? What's your advice to those thinking about getting into an entrepreneurial career where they can take control of their financial future and as it pertains to notes?
Just go. Learn something from somebody that's in the industry. Model who you want to, be like. If it's somebody like Mitch or Eddie Speed or what I do or anybody else in the industry, pick somebody, model what they do, and then take massive amounts of action. You do that, sky's the limit.
Okay, and I'm going to make a plug for noteservicing.com. They service notes in Texas. So if you have notes in Texas and you don't want to go through the day-to-day grind of keeping up with them and late fees and sending out notices and collections and end-of-year reporting, they'll do it all for you. I think it's $35 a month. I'm not exactly sure, but it's very inexpensive. And if you're creating notes, did you know that you can actually add the note servicing fee into your buyer's payment? So you should really be writing notes for your buyers that include principal, interest, taxes, insurance, and servicing fee. So instead of PITI, it's PITIS, servicing fee. And you can get it set up so that your note payer is paying for the servicing fee instead of you. Probably a little hard to go back and buy a note and then renegotiate that they have $35 more added on. It's not going to happen. So if you're buying notes, you just have to buy what's there. But if you're creating notes, you can actually build the servicing fee in. So this is Mitch Stephen with the Real Estate Investor Summit podcast. I want to thank you for stopping by to get you some Ben Fredricks. And I want you to strongly consider going out to Anaheim, California and hanging around with NoteWorthy at the convention there and meeting some really, really forward-thinking, neat individuals intent on acquiring their financial freedom or expanding their financial freedom, because a lot of people there already are financially free. I know for a fact because I've been in that room. And go grow, grow a lot of different ways. So we're out of here. Thanks for being on, Ben. I appreciate you so much.
It's my pleasure, Mitch. I appreciate you, brother.
All right, man. Talk to you soon.